Well, thank you all for attending, telling your financial story presented by Ide Bailey and your part-time controller. My name is Dan Tritch. I am the market leader for your part-time controller here in Phoenix. And I thought kind of a neat way, given the theme, to introduce ourselves is to let you know our favorite fairy tale. So I'll just tell you right off the bat, my favorite fairy tale is Rapunzel, both because of its underlying theme of freedom as an essential element of growth, but also because Rapunzel has the opposite problem that I have in that she has too much hair. So it's interesting to see that from a different perspective. I'll let Brenda Blunt, partner Ide Bailey, introduce herself and her favorite fairy tale, and then Madeline as well. Go ahead, Brenda.
So Dan, got my name right. It's Brenda Blunt. I am the tax partner here at Ide Bailey, responsible for the exempt organization tax practice here in Arizona. I also serve on the National Tax Office for exempt organizations for the firm nationally. Been working with exempt organizations for most of my career and really enjoyed doing that. And my favorite fairy tale is The Hobbit. And because I like the complexity, there's a clear good and evil, but most of the characters in it demonstrate a little bit of a mix, a little bit of a conflict within their own selves. And I love watching how that plays out, because life is complicated, and some of the issues that everybody on this call is trying to address are complicated. So that's my favorite.
Love it.
And my name is Madam Moran. I'm an audit manager here in our Phoenix office. My favorite fairy tale is Beauty and the Beast, mostly because when I was little, I just really wanted that library.
You could have read all the Tolkien, J.R.R. Tolkien books, or however you say his last name. There we go. All right, and just kind of as a short introduction to yourself, if you want to put in the chat any of the attendees what your favorite fairy tale is as well, that would be great, just as a way to kind of keep with the theme. All right, 1 second. I think I got caught in the Zoom. There we go. So a quick introduction to both of the organizations. I'll go first. About your part-time controller, we're a professional services firm specializing in nonprofit financial management. Our services include accounting, reporting, data visualization, and best practices. We have over 1,000 current clients spread out across the country in 8 regional offices. We can work in your office or remotely using YPTC anywhere, and we have nearly 3 decades of nonprofit experience. And I'll pass it over to Brenda here to introduce Ide Bailey's nonprofit practice.
Yeah, so Ide Bailey is a large regional firm. We've been in existence for over 100 years, serving clients in a wide variety of industries. But the not-for-profit practice in particular is a significant part of Ide Bailey's overall focus, representing about 20 to 25% of firm-wide revenue. So it's a big area for us. We don't do it in our spare time. It's a focus for people like Madeline and myself, where we spend our days. We spend a lot of training and a lot of resources into the area. So the practice itself is a nationwide practice. So we work out of office. We all are in our own offices, but we often serve clients in other states. But most of our client base is local. So you've got the resources of a national firm with the touch and attention of a local practice. So we love working in the not-for-profit space. It's an interesting area for us, and we really enjoy working with people who are passionate about making the world a better place. So check us out on our website for more.
Well said. And I think, one of the reasons that we enjoy working with Ide Bailey and putting on these webinars together is because we know they share our love for nonprofits and the dedication to that space. So thank you, Brenda, for that great introduction. All right, so on to our learning objectives. Number 1, we're going to define the elements of a financial story. Number 2, we're going to identify areas in your Form 990, your financial statements, and your annual report where you can effectively convey your organization's financial story. And finally, number 3 is you're going to outline your organization's financial story, and you're going to do that hopefully as we go along here. If you'll look in the download that Amy posted into the chat, you should see in here, you'll find this slide that will help you kind of outline your financial stories so that by the end of this presentation, you're ready to put pen to paper and start telling your organization's financial story efficiently and effectively. So you're getting a little preview here into our elements of our financial story. We'll go a little bit more in depth right now. So the first thing we want to do is define the elements of a fairy tale. And before we go too far in this thematic direction, we want to put a disclaimer on here, right? Fairy tales are fiction. And using fairy tales as kind of a guide to tell your financial story, we are not in any way suggesting that your financial story be fiction, right? Fairy tales are typically simple and they're compelling and they make you feel something, right? So we're trying to use those particular elements in telling your financial story, not the fictional part. So there's our disclaimer. We want your financial story to be accurate, but we also want it to be compelling. All right, so the elements of a fairy tale. Well, fairy tales have 4 basic elements. And for those of you who know quite a bit about fairy tales, you'll know that there's not necessarily consensus on the basic elements, but for my research, this is what I found. So if I missed an element that you really like, I apologize, but we're going to go over 4 basic elements of a fairy tale in terms of your financial story. So fairy tales typically have a villain, our little monster there. They usually have a hero or a heroine. There's usually some element of royalty, a king or queen. And then more recently, there's a happy ending. I made the mistake of reading some of those older fairy tales to my 4-year-old daughter, and they have some pretty dark endings. So if you have little kids at home and you're thinking of reading some of those original Grimm's fairy tales, just be careful. You might have to skip over the ending and face the questions of how did it end or come up with a nicer ending. But more recently, fairy tales have a happy ending. All right.
Okay, so to get into the villain, every fairy tale has a villain, as Dan said, just the character that hero or heroine opposes, whether it's Gaston from Beauty and the Beast or Ursula from The Little Mermaid. The villain's what's driving the conflict and making that hero's journey compelling. So in the same way that the villain makes a fairy tale compelling, the villain can make your financial story equally powerful. And then when it comes to your financial story, the villain is really the problem that your organization is trying to solve. And sometimes your organization is doing so many good things, it can be difficult to narrow down precisely who your villain is. So if you're having trouble stating that, clearly, succinctly, what your villain is, look to your mission statement. It's probably going to be the most clear, concise way to narrow down what problem your organization is trying to solve.
That's right. Fairy tales, of course, also have the hero or heroine riding in on their white horse, right? In this case, the hero or heroine is going to be your organization, and more specifically, your organization's talented staff. Maybe it may also be your unique approach to a well-known problem, the problem being the villain, right? Or it may be your partnerships. For example, if you run a homeless organization and you have partnerships with various food banks or healthcare organizations, right? The point is, though, that your organization, as the hero or heroine, you exist for a reason. You're doing something to tackle a problem, and more specifically, you're probably using a unique approach. Otherwise, your organization wouldn't exist. So make sure that when you're describing your hero or heroine, and again, we'll get more in depth into this, that you're getting into the unique way that your organization attacks that problem.
And then for royalty, so almost all fairy tales have a royal element, whether that's king, queen, princess. Today we're talking about a king. Cash is very much king. Royalty really just symbolizes power. And in the business world, but especially in the not-for-profit world, that power to deliver on your mission comes from your organization's ability or inability to manage cash. So it's important to think about what message your organization wants to send about the ability to manage cash. And we'll get into some examples, like ways to present that message in a bit, but just start thinking about what message you want to share about cash and cash management.
And go ahead, Brenda.
So every one of the fairy tales has in current, in I would say modern US history, fairy tales tend to have a happy ending. Our TV shows end that way, our fairy tales end that way. That's not true everywhere around the world. And hopefully there is probably not a happy ending for your organization, but there's happy things that you can celebrate along your journey. That should be celebrated in the financial documents that you use. So really thinking about what constitutes a win for your organization, what constitutes your happy ending. It's easy to say, oh, we have more cash, more programs, bigger endowments, but that doesn't really get to necessarily the villain. Have you done anything to increase graduation rates? What have you done to help actually feed people? Or what have you done to expand the arts to populations that historically don't have a connection to the arts? Whatever it is your villain is, need to envision what a win looks like for your organization so that you can track it and so that you can report it. It would be kind of The Hobbit without the end goal of destroying the One Ring. Is just a bunch of people wandering around in some terrible landscapes. It's not much of a story. So you need to report, yes, I destroyed the One Ring, or no, I got eaten by smog. The end. So going through that not only helps you tell your story, but also helps you focus how you manage your resources toward that goal. So give some thought about what constitutes a win for your organization. Even if you don't think you can ever cure cancer, maybe your milestones are curing cancer for an individual rather than overall, or helping them through their period of surviving cancer and their families. So define what a win looks like for you.
Awesome.
So those are the elements. We want you to take out that little chart Dan introduced at the beginning and put pen to paper. And if, that's technically complex, printing it, running to the printer, getting back, grab any old piece of paper, but jot down some information about how to bring these elements, how these elements apply to your organization's story. So looking at the elements in your financial statements, most organizations tell their financial story in 3 separate documents. You've got your Form 990, the audited financial statements, and many organizations, not all, have an annual report. Some organizations don't have audited financial statements, but they do have financial statements even still. Maybe it's a review, maybe it's a compilation, maybe it's just something that you generate within the organization without the assistance of an outside CPA firm. But your financial statements, your annual report, and your Form 990 are all there to tell the story. Too often they're treated as compliance documents. What do the standards say I have to include in my footnote? What does the law say I have to disclose in my 90? I check some boxes, done. And short shrift is given to the story that these documents tell. With that said, you've got newspaper reporters, you've got the general public, you've got your competitors, you've got disgruntled employees, you've got future employees you're trying to hire, you've got donors, grant makers, United States government, all kinds of people looking at these documents, making assessments about your organization and whether or not you're worth investing in with their tax-free dollars from the government's perspective, with their donations, with their grants, with their patronage of your services. So know that the Form 990 is a public document. Your financial statements and annual report only goes to people you want it to go to, with the exception of if you get a significant amount of government funding, then you have to make your financial statements available to the public as well. But whoever you give it to, you're telling a story, and be cognizant of that story. we're going to go through some specific examples of the Form 990 in particular, as that's woven throughout our story today. And just know that these are not our clients. These are not, this is work that we got from GUIDESTAR or off of organizations' own websites. And so it's easy to get. So if you think people aren't looking at your 990s, just know it's super easy to get. I can pull up any organization's 990 during the introduction part of a new phone call from someone who reaches out to me for the first time. So know that these are not only publicly available documents, they're easy for interested people to get. So it's important to know what story you're telling. Looking at the Form 990 itself, there's a few places where you specifically have an opportunity to really talk about the villain. Page 1 of the 990, part 1, has a place where you're supposed to put either your mission statement or your most significant activity. And most mission statements identify the villain. We've got, to go to the next slide, I think.
Sure.
Oh, we've got this one. Financial statements talk about it in note 1, the annual report, it's sprinkled throughout. But in the 990, we've got part 1, which talks about your most significant activity and your mission statement. Now you've got an opportunity here. On page 1, you can put your mission statement if you have one. If one's actually been adopted by your governing body, you can put it there. Or you have the choice to put in your most significant activity, but either one probably identifies the villain. On part 3, you only have the option of putting in the organization's mission statement, and it's the one adopted by the board. If the board has not adopted a mission statement, what you're supposed to put here is not applicable. It doesn't mean you don't have a mission, but if you haven't adopted a mission statement, you wouldn't put it here. So here's an opportunity to think, I want everybody to know what it is we're fighting against. So build that into your most significant activity on page 1. And then if you do have a mission statement, you can include that different information on part 3. So you have, instead of repeating the same information 2 places, you can use that to expand what you talk about the organization. But here, this organization, we know that the villain is systemic deprivation, poverty, and hunger in rural Uganda. That is built into the mission statement on part 3. To end systemic deprivation, poverty, hunger in rural Uganda. You can see that right in there. So the villain is really introduced very early in the 990. Part 3 will go into it a little bit more detail. Not only here's the villain, but here's how we fought it. And this we'll go into a little bit more when we get to the hero/heroine part of the story. Madeline, I'm going to talk about the financial statements, where this shows up in the financials.
Yep. So one of the best places to put it in the financial statements is in the very first footnote, which is typically about the organization. Goes over who you are, what you're doing, what you're fighting against. As we've discussed, the mission statement is a good place to look to help you define that villain. So in this example, this organization is clearly stating who their villain is within the very first sentence of the footnotes, which is that existence of catastrophic illnesses. They're looking to find cures, improve treatments, but they tell you right off the bat what their purpose is and what they're fighting against. And it's also, I think it shows that it's really important since it's right there in the first sentence, in the very beginning.
All right. And then another area where you can tell that your financial story and introduce the villain is in your annual report. So sometimes the reason I picked this particular annual report, though, is that I want to emphasize that sometimes, right, the villain actually changes, right? In 2020, we all faced a very different villain, right, in terms of the pandemic. And the annual report is a great way to discuss with your donors how the villain changes. And another reason that we want to discuss why the villain changes is because obviously that's going to have a financial impact on your organization. So giving them this context, telling your donors in your annual report what villain you're fighting and how it may have changed is going to give them much needed context down the line as they contemplate the organization's financial performance. All right, when the shoe fits, the hero and the heroine, right? How will your organization face the threat? Well, on the Form 990, there's several places that you can talk about this. You could do it in Part 3, Part 6, Part 7. And then we also have in the financial statements, again, the footnotes is a great place to discuss the hero, heroine, and describe your organization. And again, also in the annual report. So Brenda, talk about the 990.
So Part 3 is, for those people who look at the 990 simply as a compliance document, Part 3 is really underutilized because this is really where you get a chance to tell your story. So we've already talked about introducing the villain. So describe the fight. What have you done? What were your wins during the year? Again, the Hobbit or Beauty and the Beast or Little Mermaid. There's the first part of it setting up what the conflict is, but the majority and the exciting parts of the story are how the fight and how you became victorious over the villain during the year. So don't sell yourself short when it comes to this part of the return. And this is literally the second page of the return. The IRS requires a lot of information in the 990, but they put what they thought were the most important parts toward the front. So the very second page of the return, you have a chance to talk about each one of your programs and what it is you actually accomplished. I see a lot of 990s that said provided patient care.
Yeah, I was going to ask how many 990s you see have just say patient care or something like that, right?
And then just moved on. It's a compliance document in my eyes.
Yep.
Here we have an example of the hospital provided 19,201 inpatient days of care. The bone marrow transplantation program accounted for 4,622 or 24% of those inpatient days, and patients made 70,374 clinic visits during the year. So we also have the expenses and the revenue of those activities. The story here is we spent 517 million on providing this care. We had earned revenue of 131. That means we need almost $400,000 or $400 million to come from somewhere else. That somewhere else is the donations that you're asking for. So this tells a very powerful story about what you're accomplishing and your need for donor support. There's a lot of people who try to calculate a social return on investment here. So we know we've got a little bit of mix. We've got really two different things going on here, the clinic visits and the hospital stays. But if we took 90,000 people, we could figure out what we spent per person and use that to try to compare, do we think that's a good return on investment? So those are all parts of the story that can be told here. If you're aware of how this information gets used and how the organization is judged based on it, you can do a better job of identifying your programs and providing relevant information so that your story celebrates your accomplishments. You want it to be true, but you also want it to be, a good story. And if it's not, if it's true, but doesn't tell a good story, what changes do you need to make in the organization to make sure you're doing a better job of fighting your villain? The next part is part 6, and this is a key part of how you run your organization. It tells a lot about the organization, who it is, who's running it. we'll get to and back to this in a little bit, but for instance, the very first question: how many people do you have on your board? Can tell a story. Do they delegate their authority to an executive committee? That tells a story of who's really running the organization. Is it the board, or is it the executive committee, a much smaller group of people typically? How are you managing the organization? And we'll get through some better examples later, but this provides a lot of view into who the organization is. Is it well run? To put it in fairy tale parlance, you know, do they have the tools it takes to fight the villain that they're up against, or are they just going to get smushed? If they're going to get smushed, I don't really want to fund their journey. Part 7 will say who is on the board and how much time they spent working for the organization and whether or not they got paid. A lot of organizations, the employees all worked exactly 40 hours a week, and everybody on the board worked exactly 1 hour. And that really doesn't tell the story. Many executive directors work more than 40 hours a week, and that effort, I think, needs to be told. If it's an 8 to 5 job for them, they clock in, clock out, it's a 40-hour week, and that's all there is. I think that tells a different story about the organization and the commitment to the organization. So every CFO I talk to works more than 40 hours a week for nonprofit organizations. It's a lot of work. So give these people credit, but also think of this as a way to demonstrate the passion that these people give to the organization and why they're worth the salary that they're being paid.
Okay, so then in the financial statements, kind of similar. So a good place to talk about your hero is just that same footnote we were discussing before with the villain. Note 1, your organization footnote. Put that hero up against the villain right away to get that conflict going and get the interesting parts of the story being told. So in this example, the first paragraph is similar to the previous example for the villain. It also introduces the hero by mentioning 2 primary service areas in that last sentence. A lot of times we see it where people will just stop there. They'll just say, we have these other service areas, they might name them, then they'll stop. You don't have to stop there. You can take the opportunity to really describe those programs, describe those heroes. What are your talented staff doing? How are you addressing that unique problem? Really add the color here to illustrate your hero. The first footnote usually also has a bunch of accounting policies. Like, you don't just have to talk about your AR, your debt issuance cost policies. Like, we get really wrapped up in the accounting policy discussion of this footnote, and that's important too for the compliance side. You need all that stuff, but you really have the opportunity here to be a bit more creative and add some detail to a document that's not really, doesn't really work for a lot of creative aspects. It's with all the requirements with GAAP and having to have certain disclosures. This is one of your main areas to really take advantage of that.
Madeline, if I could ask, what percentage of your clients do you think take advantage of that first footnote to really tell their story?
Not many, less than half for sure.
Yeah, and I think it's definitely, I mean, you're already doing the audit, right? So it's definitely an easy way to get your story out there in a way that maybe you weren't before. So definitely something to consider going forward.
Too many organizations have the mindset of our auditors do our financial statements. They're your financial statements. The auditors are auditing the financial statements. They may assist you. They may have templates to help. They may even draft it out of convenience. But if you don't use it to make it your own story, you're really selling the organization short. Not just the organization, but the donors and other people who are interested in your organization just don't get the information from it that they could.
Yep. It's a shame. And Madeline, correct me if I'm wrong, but they can sort of take a stab at writing note 1, and then you guys just have to read through it to verify that there's nothing that's antithetical to the rest of the statements, right? You guys don't have to audit every word, but you have to make sure that it's consistent with the statements. Is that correct, as the auditor?
Yeah, especially that first part with the organization. That's really up to the organization.
Okay, great. Onto the annual report. Defining the hero and heroine in the annual report is pretty easy. But so for here, what I just say is don't be afraid to brag, right? And you can brag using non-financial and financial metrics. So if you look to the left, this particular organization is bragging using non-financial metrics, right? They're talking about how they're solving this issue. So they've apparently built a library, right, where they have library visitors. They've served 4,740 people at Katamba Health Clinics, and they've served 1,026 grandmothers, children, and pregnant mothers tested for HIV/AIDS, right? So there's a number of other metrics on here, but they're showing clearly, right, that the ways that they're tackling poverty and access to healthcare in rural Uganda. On the right is an interesting way of using financial data to show how you're tackling the problem. This is, you can see it at the bottom, St. Jude's Children's Research. And what I liked about St. Jude's was that they showed the average annual individual giving, right? Showing that they are relying a lot on that individual, on those individual gifts to fund the free healthcare for children is essentially what they do. And I don't know if many of you guys have, paid attention to the news recently, but there was a article in a publication called ProPublica that was kind of negative towards St. Jude's, right? I don't know if you saw it, but it was essentially talking about how they don't pay for housing for the families of the kids, for all of the families, and lost wages for the kids who are treated at St. Jude's. How you choose to interpret that particular article is really up to you. But if you went to the annual report here, you can see how hard St. Jude's is working to at least cure childhood or give children free medical care, right? So it provides some much needed context, especially as Brenda said, there are news publications out there that are publishing stories on you, right? So this is a way to get the story out first for you. And I'm not proposing any sort of interpretation of that particular article, but this is a good example of where they put out some really good financial information that might counter the negative message in that particular article. All right. So now to our on bended knee, our royalty element. So cash is king. What's your decree? So cash is king is an axiom from the for-profit world, right? But it applies to nonprofits as well. The cold hard economic reality is that people will not work or give you goods and services for magic beans, right? They need to be paid. So consequently, cash is essential if you want to run your programs. So how can we project strength and show that we take cash seriously? Well, in the Form 990, we have the Schedule O, and then we have a few policies we can disclose and discuss. In the financial statements, again, we can look to the footnotes, though a different footnote this time. And then in the annual report, we can use some visualizations to project our cash strength as well. So we'll go first to the 990.
So going to the 990, part 6 is the primary vehicle for giving some insight into how the organization runs itself, how it manages its expenses, how it makes decisions about programs. So here's an example. This is actually an answer on Schedule O, but it's an answer to a question that's asked in Part 6, line 15 about compensation. How is compensation set for your executive director and your other officers of the organization? When you look at the expense statement of functional expenses in a 990 or in a financial statements, and you see that the biggest number is usually compensation. So if you're not doing a good job of managing compensation, you're probably not doing a good job of managing the organization. Just like every other expenditure, you don't have to be the low payer in your organization. You need to pay enough to make sure you're getting good quality results from your employees and your vendors. So this is an opportunity to talk about what does the organization do to make sure that they pay enough compensation to attract sufficiently competent people without overpaying them. Here, the board retained the firm of Mathers Associates to advise on terms of employment compensation and related matters prior to hiring their executive director. Great, so they got some outside professional advice. Some organizations do look at compensation studies, and they have a compensation committee who evaluates the executive director, who to decide where they should be on the bell curve of compensation. Should they be at the top, in the middle? Where do they need the person to move to? Where are they performing? So some great information there. We've also got questions about conflict of interest on line 12 of part 6. How do you manage conflicts of interest? How do you make sure that the decision makers aren't on your board or running the organization for their own personal benefit instead of trying to fight the common villain? Your gift acceptance policy is actually in a different place on the return, but it's on Schedule M. But it's how do you evaluate, or do you evaluate your non-cash gifts to make sure that you are not inadvertently accepting a greater liability with that gift than the gift itself is worth? How do you make sure you can manage it? So a gift of real estate is great. If it's a super fund site, not that great. If a gift of S corporation stock might seem great, it's stock in a corporation, but if it doesn't pay out any cash and you have to pay tax on the income, that's not great. So how do you evaluate some of those non-cash gifts to manage for the overall financial benefit of the organization? Embezzlement disclosures. Part 6 is a bunch of yes or no questions. Line 5 asks if there was a substantial diversion of assets, so effectively embezzlement. You say yes or no. If you say yes, what story is that telling? It's true. You did face some embezzlement. Lots of good organizations do. So it would be true maybe in a given situation to say yes. But if you say yes and leave it at that, you're not telling your whole story. Going to Schedule O and saying, yes, we did, and we recovered it, or it was covered by insurance, or we've changed our policies to prevent that sort of thing, or somehow restoring confidence in the organization would be a good part of your story to tell. You're not required to provide any other information about it. So from a compliance standpoint, you can't say, yes, we did, and move on. But from a storytelling standpoint, that might not be the best thing for you to do. We've also, I mentioned before, who's actually running the organization on line 1A and line 3 of part 6. Is it the board, or is the management of the organization delegated to some other party? Nothing illegal or wrong about it, but in terms of telling your story, who's actually fighting the villain is an important thing for everybody to know. So take a look at those, and again, if it's important you answer truthfully, but if the true answer doesn't tell a good story, is there some context that you can provide, or should you look at the operations of the organization and change your policies or create some policies so that it is a more financially fit organization going forward, worthy of the trust of your donors and other people who invest in your organization?
All right, thanks, Brenda. To get into the financial statements again, in relation to this whole cash is king kind of mentality, there's a few different places you can convey your cash management story that are not in note 1 this time. In this example, this organization is using part of their net asset footnote to talk about how intentional they are with cash, how they manage it, what the results are. Another good place to do all of that, though, is in the liquidity footnote on the next slide. Yeah, so the liquidity disclosures are a relatively new requirement, came about past couple years. They should really be valued, though, because they're a very effective way to convey what assets are available for general expenditure within the next year, both quantitatively and qualitatively. So in the table, it goes through the current assets available, and then the narrative section is really where you can add some more of that detail and background. Like if you have board designated endowments that aren't available for general expenditure, but could be available if necessary. We can talk about that here like this one does, or operating reserves as well. If you have
Sorry.
it's okay. If you have a goal of like days cash on hand, you could talk about that and whether that was met, or what your budget process is like if you're operating within a balanced budget or not. You could add some of that info from the net asset section on the previous slide too, if you wanted to keep it all in one place. But this is another good area where within the compliance requirements, you can add a lot of that background and detail behind everything.
Perfect. And in the annual report, there's another place where you can emphasize your organization's, the importance your organization places on cash. This is pretty much the only example I have in here that I actually really don't like. But I will tell you, I searched through a lot of annual reports, and this was one of the few annual reports that actually called out cash. And they just give us the very basic number from their balance sheet. But on the bright side, I think what this means, though, is that this is a way your organization can distinguish itself in the annual report. I looked through many, many annual reports, and very few gave statistics on days cash on hand, unrestricted versus restricted cash, things like that, right? So I think this is the fact that I couldn't find a really great example means that there's a way for your organization to distinguish yourself to donors and show them the importance that your organization places on cash, or what kind of position your organization is in with regard to cash by presenting days cash on hand, unrestricted versus restricted. So keep that in mind as you're doing your annual report this next year. I think there's a lot of room for organizations to talk about their cash management policies and their cash position. All right. And as we mentioned earlier, most modern fairy tales have a happily ever after, right? So what's a fairy tale without the happily ever after, right? Well, there's a few places where you can tell you're happily ever after. We have the Form 990. We can do Part 9, Statement of Functional Expenses, the financial statements, the net asset footnote, and we can again go back to the annual report.
So the statement of functional expenses tells a story, but it doesn't tell the whole story. If you are at all familiar with the overhead myth and some of the conversations around that, people look at the statement of functional expenses, see how much you spend on program, how much you spend on overhead and fundraising, and try to interpret that as a way, is this organization doing good for charity? We want all of our money to go to program and none to go to fundraising and management in general. The fact of the matter is, we don't assess any other good or service in our economy based on how much went into the product. We look at what is the product, does it do me any good? And if so, I don't care how much management in general the organization had that produced that product. However, unfortunately, many times the information in Part 3 has been given such a short shrift that there isn't any other way to measure the organization. And so this 90 cents on a dollar goes straight to program. It becomes a compelling story because there aren't any other stories being told. Here in this example, 22% is going to supporting services, 78 is going to program. That's a completely reasonable allocation of expenses if United Way is looking to fund you, but it doesn't tell the whole story. So pairing it up with Part 3 is like, what did you do with the money? Did any people get fed? If so, how many? Are you moving the needle in your fight against the villain? You feel free to tie that back to the statement of functional expenses if need be. Our overall budget was 1.6 million or something, and for that we accomplished all these amazing things. If we all could do a better job identifying who our villain is and what constitutes a win, we could do a better job of measuring those wins, and then would be in a better position to tell that story, both in the statement of functional expenses and in Part 3 of the 990 return. You certainly don't want to resource the organization by cutting back on needed management and general expenses, or needed fundraising expenses, and put the whole organization at risk. No money, no mission, but give the people something else to measure yourself by, or else it's your own fault if you're measured strictly by that one metric.
Yeah, well said.
Yes, okay. So in the financial statements, how do you show that happily ever after there? One of the ways to do that is in the net asset section, whether that's on the face of the statement of financial position or in the footnote. Either place, it's a good way to show, how your hero fought the villain and some of the net results as of your year end. So the example on the right has the summary of the statement of financial position, has with the donor net assets without donor restrictions. When it comes to with donor restrictions, that's where the net asset footnote really shines. And that's the example on the left. So this outlines like what the ending donor restricted net assets are, what funds are required to be used where. You could use this to show which areas maybe don't have as much sitting in donor restricted net assets, maybe programs that might need more specific funding. Like in this example, the international relief has less donor restricted funds at the end of the year than the disaster and humanitarian relief, but the disaster and humanitarian relief was used during the year. So it's like, you can see that they were used and helps us tell the story that way. If I was a donor, I might consider, if I wanted to make a donor restricted contribution, I might consider restricting it for one or the other just based on this. There's also like a release from restrictions section of the footnote that we don't have a screenshot of here, but it shows like how the restricted funds were used during the year and what programs were specifically funded specifically through those releases. So these both just have good information for the readers to see that accumulation of net resources for those programmatic or even endowment purposes.
All right. And then in the annual report, kind of in the vein of what Brenda said, right? Like it's up to you to tell the whole story, right? Otherwise, you're going to be at the mercy of just your numbers, right? So for example, here in this particular annual report, you can see it was a loss here for them. They had a negative change in net assets. So I'm glad though to see that this particular organization on that very same page chose to tell the whole story, right? Well, okay, 2020, we had a loss, but it was a COVID year and they expanded services in Northern Arizona, right? So whereas initially you might see a loss as bad news, right? Me as a donor, I'm looking at this page and saying, this is an organization I want to give to. Yes, they had a loss, but expanding services costs money, right? So this is an organization that is focusing on their mission and focusing on outcomes. And this is the sort of thing I want to fund. So without all of the information on this page, we might think, oh, this organization had a bad year, but in reality, it was a very successful year given their mission. And finally, the last part, our epilogue, other opportunities to turn programs, to turn programs to picture or prose. So one thing I wanted to talk about here is the management discussion and analysis. The MD&A, as it's frequently called, is becoming more popular to use both in annual reports and in financial statements. And let's be honest, right? Most fairy tales that we're aware of are illustrated, right? So in your MD&A, in your annual report, in your financial statements, don't be afraid to add visualizations like the one we have right here. For example, here you can see a 5-year trend of expenses by type of service, and you can see expenses overall falling, right? But then on this same page for this particular organization, they added this really nice statement of functional expenses kind of, and they expound upon what the expenses were for various years and why they either went up or down. And that provides much needed context to donors. For example, here I can see this organization is in transition. They're paying $48,000, or there's an increase of $48,000 in contract services due to an interim CFO, right? So or interim CEO. So there's there's something that's very important for a donor to know. And you can use either your annual report or even make room in your financial statements to do an MD&A and expound upon the changes in your organization. Don't forget too, right? Once you publish or once you write your financial story, publish it. Make sure it is accessible on websites like Charity Navigator, GuideStar, which is, as Brenda mentioned, where I got a lot of this information, right? Savvy, sophisticated donors are going to GuideStar, so make sure your story is there. Put it up on social media, Twitter, Instagram, LinkedIn, and that's about all I know for social media. So that just shows how old I am. I'm sure there are other places as well that people are going, but those are some good examples. Point is, make sure that once you spend all this time writing a compelling financial story, make sure people can find it, right? I've been to so many organizations' websites that are either new clients or potential clients where I go to research them. And I go to their website and it's very difficult to tell their what they do, but then also their financial story. So make sure that once you make the story, make it easily accessible on one of these websites or on your own organization's own website. I wanted to provide this example here because GuideStar, if you have platinum status, you get this kind of ability to really tell your story on GuideStar's website. So if a donor were to go look, say, hey, I want to pull down their 990, they would also see this right here. And I really love this example here because from this example, we can see the villain, we can see some information on a happy ending, and we can see some information on their methods, their hero, on how they tackle the problem. So right up front, right, the villain right up there, what we aim to solve. Teachers can spend up to $1,000 a year out of their own pockets for classroom supplies. As a former teacher, I can tell you that's true, right? So teachers need help paying for those supplies, right? So their organization helps to alleviate that particular issue. Then they provide some examples of how they solve this problem, and on top of it, what the results were, right? What their happy ending was. They have some numbers down there. They're currently serving 6,500 educators, of which nearly 90% are serving low-income populations, right? Point is, there's this really nice, succinct advertisement on GuideStar for this particular organization, and all they had to do was be willing to tell that story. So make sure that you're taking advantage of that. All right, so this comes to the end of our presentation. We're just going to summarize our objectives. We defined the elements of a financial story. We identified areas in your financial statements, Form 990 and annual report, where you can effectively convey your organization's financial story. And hopefully you're using the worksheet going along and you outlined your organization's financial story so that you're ready to put pen to paper. Here's our contact information here. There's Brenda, Pam, who's the partner in the assurance part of Eide Bailly for their nonprofit practice. And there's Madeline's information as well. And then my information is to the right. You can email us at hello@yptc.com or at our emails there, Dan Tritch or Deanna Peterson. Thank you so much for attending. Amy, is there any parting words that we need to give? Brenda, Madeline, do you have anything you want to add?
I see we don't have any questions, but if anybody does have a question, you want to raise it. Otherwise, follow up with us later. We'd love to hear from you.
For sure.
Perfect. Okay, guys. Well, hey, you get 2 minutes back in your day. Such a great presentation, guys. Thank you so much for presenting. Thank you to all that attended, and we'll see you guys next time. Have a great night.
Have a great afternoon.
Thank you.
Bye.
Bye-bye.